when you look at the supply and the demand, we're grossly undersupplied. We'd have to build, I think it's something like 1.5 million homes per year for the next 10 years to catch up. And I think we build about a third of that. Combine that with, it's a bit of a recipe for disaster. I think that if you want to get into, the opportunity is not capped in any way. Like if you wanted to scale a portfolio right now, you could absolutely do it. I always say construction is like, if you have the right, your life can be so much easier versus if you're trying to do something with the wrong. The best deals are not found, they're created. I don't need to buy something at a crazy discount. Obviously, if I can get one, that's fantastic. But a lot of the stuff we buy is on market. It's because when we control all of that now, we control the timelines, we control the costs, and we're seeing our construction costs just keep coming down and down and down. We're trying to help solve the housing crisis. We're employing people, we're giving people livelihoods and jobs and things like that. And ultimately, I'm not gonna lie, I get to profit at the end of the day too. So that's kind of like that win-win-win scenario. And so that's where we're really trying to create efficiencies on all sides of things.
Welcome to the Wealth Through Real Estate Show. Today, we're joined by Darren Voros, a real estate investor and developer with over 20 years of experience, known for his expertise in purposeful developments and renovation. Darren is passionate about addressing the Canadian housing crisis through the missing middle development projects. He has featured on platforms like HGTV, Cities TV, Cityline, and is an advocate for financial literacy amongst real estate investors. Today, we'll dive into his insights on development, renovation, and how government incentives are shaping the future of real estate. Darren, I want to welcome you to the show.
Well, thanks for having me. It's great to be here.
Now, Darren, can you walk us through, let's start at the beginning, your first investment. How did you get into real estate?
So I bought my first property 2002. It seems like a lifetime ago. 22 years ago, I was working over in Japan in 2001, and I used to be my career for 15 years was musical theater. So I worked as a singer, dancer, actor. I traveled all over the world.
Way.
And so in 2001, I spent the entire year working over in Osaka at Universal Studios. And while I was over there, I was able to save up a little bit of money because we got everything kind of taken care of for us. Like our apartment was paid for and our train passes and bicycles and gym memberships. And we got a per diem and we got a salary. And so at the end of the year, I hadn't touched my salary at all. And we got paid in US dollars. I came back to Canada and I converted that to Canadian dollars. And I didn't know what to do with that money. I was like, well, I guess I've heard real estate is a good investment. I knew nothing about it. Bought my first house. I bought it from a builder. I was actually doing a show out in Charlottetown. So I purchased it. I went to Charlottetown for the summer, did a contract out there, came back. It was completed upstairs. And I did some little things like did the flooring, I think, upstairs. And then we decided that we were going to finish the basement. So my mom and I and my dad helped me out a little bit as well. And it was like finish the basement. And the idea was to sell it and profit and kind of use that to supplement my theater career. Couldn't sell it. Not because we didn't do a good job or not because the market wasn't strong. It's just that there was still lots of supply at the time. And real estate is a very simple game. It's supply and demand, right? And so it was a situation where you could buy the same property from the builder. And if you did that, you got to customize everything like your own, paint colors and cabinets and countertops and whatever. So I couldn't sell it. I rented it out. And 4 years later, it had gone really, the market had gone crazy in Alberta. That's where I bought my first property. And I sold it and almost doubled my money in 4 years. I took that money and I bought 3 properties. And that was when I started to get this idea that real estate could be kind of cool. And went from 1 property to 3 properties in, 4 years. And I thought if I could keep doing that, scaling the business, then there would be something there for me to have in my retirement. But I never thought it would be my full-time career. But that was the very first property that I bought, and it kind of set me up for everything that I have today.
Wow. So again, the true definition of accidental landlord. You were looking to sort of just flip this, sell it, and now you're stuck with something that sort of opened up your eyes to a whole other realm. I love that story. Okay, so you're like, well, wow, okay, I'm intrigued now. There's power behind real estate. I can build something here. So
Yeah.
how did you approach it going forward from there? What happened?
I became a little bit more strategic after that. I definitely wanted to acquire properties because I had multiple properties then. I was like, well, they need to be able to support themselves, right? I didn't really know a whole lot still. I mean, I had read a couple books, but there just wasn't the education that's available now, I don't think. I mean, I know everyone probably
Yeah,
says that like, oh, back when I got started, it was a lot harder, but I feel like it was harder. Like there just wasn't a lot of
yeah,
information out there. I read a couple books and I learned about cash flow a little bit, but even my first couple properties, it was like as long as they broke even, I thought that was good, right? And by broke even, I
yeah.
mean like I was still managing them myself, and there was very
Yes.
little cash flow and stuff like that. But yeah, that was kind of like my next step was buying properties that were I bought a triplex that I still own today, and that was in retrospect, that was probably one of the best purchases I ever made. I was in a like an out like an outskirts neighborhood in Toronto, and now it's like a prime neighborhood in Toronto. But it was 2007, right? I paid $395,000 for that property. It's worth 2.5 million today.
Oof.
So it's like that kind of stuff. Then I
Yeah.
started to be a little bit more strategic. But I would say it was still another almost decade before I had six properties at that point. And 10 years later, in 2016, something like that. And that's when I got educated on real estate investing. And that's where I think I started to really see some progression and started to buy properties, and analyze them properly. And then I kind of got into development a little bit later after that. But yeah, I would say in 2016 was really where I started to understand real estate investing and how it all worked, from that perspective.
Yeah, yeah, I get that. And buying in the path of progress. Wow. The ROI that you get there is insane. Now, um, I'm intrigued. So you kept it in the quote unquote residential space for quite some time, right? Anything less than 4 units, essentially, 4 units or less.
Yep.
So what made you transition out of residential?
It was
Not that you completely out of it, but like explore other avenues of real estate.
Yeah, I mean, it was actually during the pandemic when I had done a couple of like triplexes, a lot of duplex conversions, and it wasn't that I was bored with that or anything. I happened to go into a property, look at a property in my neighborhood, and it was the purchase price. Really, it was kind of what forced me
Mm,
into getting into more than two or three units because it was the largest purchase that I had potentially looked at, and I thought the only way this is going to make sense is if it's like 6 or 8 units, something like that. So I knew the zoning was there to do it, and I knew the property could support that kind of density on it. I knew we'd have to go for some minor variances, but I'd been through that process before. And so it was kind of, I was looking at the different ways of being able to just execute on that. And I could buy it residentially and convert it to a multi-unit, and then I could exit as a commercial property. And that was sort of that first transitional element into development. And so it was, again, not to say that it was like I kind of backed into it. I definitely knew what I was doing, but it was
yeah.
like, okay, that's sort of taking me to that next level. Is like, okay, I'm going to get into this, next level of purchase price, and then that's going to need to get me more units in order to support that purchase price. And then that's kind of how the development train started from there.
That makes sense. Now, my understanding is so you have the theater background. At that point in time when you just got started, did you have much construction background, or was that something that you sort of built on your own properties just as you went along?
Yeah, I didn't have any construction experience at all, and I get that question a lot. It's like, "Oh, was your dad handy?" I'm like, "My dad is. I love him. He's the least handy guy, though. I mean, he's learned a few things, but all from me. Like I've had him on different sites, and he's a good gopher. He goes and gets stuff for me and whatever else. But not. I didn't grow up in the construction world. My mom is actually more handy than my dad, and my mom kind of comes from an interior decorating background, so when we bought that first property, I was telling you, like we did some of the painting and the flooring and things like that. And as I did more projects and as I bought more properties, I started to gain more skills because I was in there doing sweat equity on every project,
Yeah.
right? And I so like as the projects got more and more complex, so did my skill set, and I definitely did some stuff wrong in the beginning, and that was good learning experiences. But I've always kind of done things through the right processes, like through the permit process. Like I've always done things legally. So it's been a good thing
Yes.
to learn, like learn from the building inspectors, like, oh, you did this wrong or whatever. I'm like, okay, I'll fix it, and then you learn that process. And so my construction knowledge grew as my real estate knowledge grew as well. And so now I feel like I'm
Mm.
just on the other side of that, where I've had enough experience in the construction world that I feel pretty comfortable with any kind of residential building, but I'm still learning all the time. I still learn from people who do it every single day, and I see them do certain things, and I'm like, oh, there's a little tip or trick that I didn't know before, and that's how my construction knowledge has continued to grow. And the other part of that is just getting the right tools, right? I always say construction is
Yeah.
like half tools. If you have the right tools for the job, your life can be so much easier. Versus if you're trying to do something with the wrong tool, it could be like you could spend days doing something, right? So that's how my
Yeah.
construction knowledge sort of evolved over time.
And was it sort of out of necessity? Because you do get other people that get started in real estate and they're like, hey, I don't wanna do any renovations. I just want to outsource that. Was it like necessity, and then grew into like, oh, this is actually fun. I enjoy the renovation process. I enjoy being a part of this, and I'm pretty hands on. And you just sort of that developed into a passion, because there has to be some level of passion behind it. If you sort of just grew with that and branched over into development, right? Is that sort of more or less how that went?
Yeah, I mean, I think this is one of my, I would say, limiting beliefs in some way. I think I grew up in a household where it's like if you wanted to get something done, you kind of had to do it,
Do it
like,
yourself. Yeah.
and so that was just my mindset. And I think honestly, if I looked at the numbers on my first couple projects, they wouldn't have made sense for me to hire it out to someone else,
Hmm.
right? It only really
Yeah.
made sense for me to do it myself, and so. I had no choice. So it was necessity, right? I had to kind of get in there and do the work in order to make it make sense. But as you start to understand construction more and understand the time value of money, right? And like how much time am I putting into the site? What's my hourly rate, and should I be
Yeah.
spending more time on the job site, or am I more valuable somewhere else? That's where you start to understand, should I still be in the construction world, or should I be stepping out and doing other things? And so I've done a mix of that over the last couple of years, and I'm back sort of on the tools a little bit more right now, but that's only a short term thing because I'm really training new people to step in and
Yes.
manage our projects, manage our sites. And so there is a bit of you lose productivity because I'm on the job sites more. But to your earlier question, I absolutely love it. My favorite days are days when I can actually be on the job site and I don't have anything else to do. It's very rare that that happens, but there's something about it that I really love. I mean, today we were working on some simple interlocking paver like pathway, but you start the day with nothing and you kind of finish with
Yeah.
something, and at the end of the day you get to be like, hey, we did that today and it looks great, and it's going to be something that we look at for the next decade, and you're going to be like, oh, I remember the day that we did that, and that to me is where
Yeah.
construction is really cool. And I think people that do like it for that reason. It's one of those few things in life where you get like instant gratification from doing your construction projects.
That is so true. That is so true. Oftentimes, you put the reps in, you put the work in, but a lot of the progress is done behind the scenes, and then you see an end result, and it's like, well, that came out of nowhere when it didn't. And you're right, you could actually track the progress, and you can see how things move along. It truly is. It is magnificent, and then be able to look back at what this looked like before and what it looks like now. And yeah, I fully agree. Now, what I find speaking to a bunch of high level real estate investors is that they find a way to stack their skills one on top of the other and use that to their advantage. So you have that passion, and that sort of formed out of necessity, that you started building on top of that skill, and then you have the experience that you slowly got started with. And of course, like, one of the things you kind of alluded to was one of your best deals, and a lot of it being location specific, right? We know real estate is location, 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 right? Now, where you're currently at, when you look at a location, how do you evaluate whether this is suitable for a purpose-built development? Especially when you're trying to balance the financial feasibility with the need for just more housing in general.
Well, I think right now for me, I really actually like Toronto, and I like the core of Toronto for a bunch of different reasons. A lot of people don't like it. A lot of people are like, Toronto doesn't make sense. It's too expensive. It's too this. It's too that. And I'm like,
Yeah.
it is like it makes no sense as buying a single family dwelling. It makes no sense buying a condo. Those numbers are never going to work.
Yeah.
But I always say like the best deals are not found; they're created. And so when
Mm-hmm.
you understand the zoning bylaws and you understand how it all works, I can go and the other thing too is like I don't need to buy something at a crazy discount. Obviously, if I can get one, that's fantastic. But a lot of the stuff we buy is on market. And it's because those people that are selling those single family dwellings or whatever they don't know that they can build a 10 unit building on that piece of land. I do. So I know the end
Yes.
value of what I'm purchasing, and their purchase price for their single family dwelling is like it's the market value essentially. But I'm like, that's fine. I can pay
Yeah.
market value because I know that I'm going to be able to turn that into a multifamily building. But to answer your question, I think specifically, I really look for areas that are easily accessible for transit for my tenants.
Yeah.
They need to be relatively close to either a subway or a great neighborhood, or both. In a lot of cases, and so we're now buying stuff that's in established neighborhoods. We don't have to go out to the perimeter. We're actually in the core of the city. Like, if you're familiar with Toronto, we have a property on like Dovercourt and Dufferin and High Park. And in the Junction, we have multiple properties. So these are all like
Yeah.
really established neighborhoods, places that people really want to live. And we've kind of
Yeah.
created this boutique apartment building. So they want to live in these well-established, walkable neighborhoods that are close to transit, but a lot of people don't want to live in the 20-story skyscraper. They want to still have that neighborhood feel. And that's kind of where we've commingled those two worlds together. They get the benefit of the price point of a sort of condo type build, but they don't have to be in a 20-story high rise, and they don't have to deal with elevators and all that kind of stuff. So that's the model that we've created, and it's working really well. And I think the thing that's changed a lot is the regulations and some of the things that have helped us push those projects forward over the last couple of years.
Yeah, yeah. I'm intrigued to. I mean, this is happening here in Alberta as well, as you know, and I'm specifically inside of Edmonton, and it's a very popular strategy. Is the infill development where people
Yeah.
build six plexes, eight plexes. Um, and I fully agree with the. I mean, my mentor actually says this is the green space versus the white space is finding those lots inside of the city. It's a lot harder than just going outside of the city and just developing, right? It's a whole lot easier to do it that way. But in terms of long term, looking at which is going to perform better, chances are those who perform better. What's your thoughts on all of this? And then if you could expand on people's potential concern on, yes, we're in a housing crisis, but what does this look like years from now if we build in so many of these, supply and demand? If you don't mind just touching on that as well.
Yeah, well, I mean, I'll touch on that first. I think like when you look at the supply and the demand, we're grossly undersupplied. I mean, I
Yeah.
think the stats are something like we'd have to build. I don't know. I think it's something like 1.5 million homes per year for the next 10 years to catch up and to sort of like that demand. And I think we build about a third of that. And I think there's about 500,000 housing starts or something like that. I don't know if my numbers are accurate, but I know that the approximate like percentages are correct. And so when people ask me that, like, well, how is like, what happens if we could do that? Like, if they just change all the regulations and they make building so much easier, wouldn't everybody jump into the development game? I'm like, yeah, except there's no workforce. So you can't
Yeah.
get people to build these properties. So even if they stripped away all the regulations and they said just go ahead and build whatever you want, you wouldn't be able to find people to actually do this work. And so that's the other part of it, right? And people don't talk about that part of it a lot. So
Mm,
those two things would have to simultaneously just basically get all the red tape removed from them, where you'd have the workforce to be able to perform this stuff and the regulatory things
yes.
eliminated for people to get projects in the ground just that much faster. Those two things are not going to change anytime soon. And so, there's actually, we're experiencing an even greater backlog that over the last couple of years, because most developers in this high interest rate environment that we've experienced over the last 2 years, they just said, pencils down, shovels down. We're not putting anything into the ground. So they had this supply, challenge to start,
Yeah.
and then all of a sudden, there's been 2 years of really even less building than they need to keep up with the previous supply. And so now you've got
Yeah.
this even bigger wave of challenges. Combine that with immigration policies and things like that, it's a bit of a recipe for disaster. And so I think that, if you want to get into development, if you want to get into this space, there's a lot of runway here. There's I think at least a decade of sort of greener pastures. And my friends and I who are developers talk about this all the time. Like this is a limited potential opportunity, but I'll tell you what, the opportunity is not capped in any way. Like if you wanted to scale a portfolio right now as a developer, you could absolutely do it. This is one of those rare situations where you've got financing, you've got zoning changes, you've got all these things that basically the entire government at all levels, federal, provincial, municipal, is like, can you please build more housing? And so the people that are able to capitalize on that, there's a tremendous amount of opportunity there.
I was just about to ask you. I know you probably have systems and procedures in place so that you can make the most of this, and knowing and seeing the opportunity, seeing the need. What are some things, if you don't mind sharing with us, that you've really honed in on so that you can be as effective as possible in this time of opportunity and time of need, really?
Well, there's a couple different things that we're doing. One is we're basically trying to get into the ground as fast as possible. So I don't like to go through zoning changes. I don't like to go through any kind of regulatory process. I really like to say that's why in Ontario we do 10 units and under, because it's not subject to what we call site plan approval. In Alberta, it's called a development
Yeah.
permit. So we don't have to go through that if we're 10 units and under in Ontario. So that's one thing. We don't go over 3 stories as well, because basically we want to avoid sprinkler systems and elevators. We keep our builds really
Mm,
simple. They're Part 9 buildings, which means they're basically built like a standard house, wood frame construction, stuff like that. It's really simple to build. We're now getting into a situation where we're basically creating a cookie cutter design. So it's like we've got a design for, a 6, an 8, and a 10 unit building on a 20-foot lot, 22-foot, 24, 26, 28, sort of like those standard sizes of lots that we see here. So we're not having to go back to an architect every single time we have a new project and be like, hey, can you design this unique building? It's
yes.
like, no, we already know what we're building on here, and here's the plans. And that just gets us through
Mm,
the permit process that much faster, because we know we don't have to go back into
yes.
design. We know we can get that permit approved because it's already been approved from a previous plans examiner. So we've kind of ironed out all those bugs. And then also the
Yes.
last thing is like I'm bringing construction in house. So instead of hiring out subcontractors and general
Mm,
contractors, we've now got a crew, and we're instead of paying somebody else's overhead, I'm paying salaries and I'm paying for materials. And so that's greatly reduced our construction costs. It's also really helped with timelines. It's also really
yeah.
helped me control the entire site, the entire process. I know exactly what needs to happen in what order. And if my guys are all like there on one given day and I'm like, hey, we're going to pivot and we got to just do this one thing before we can do this other thing, then they can do that. Whereas previously, if I had to have somebody else come in and they had to do this one little task so that this next trade could come in and perform what they needed to do, sometimes that could be a 2 or 3 week delay because that person's not available to come in and do that thing that they need to do for that next trade to come in and do their thing. So when we
Yeah.
control all of that now, we control the timelines, we control the costs, and we're seeing our construction costs just keep coming down and down and down. And you know what? I love it. I love employing people. I think it's a great thing to be able to do. I have 7 people that I employ full time on the construction side, 3 people on the office side. So my team keeps growing, and I just think it's one of the coolest things you can do is create
Yeah.
livelihoods for people. And I think that's one of those things where it's like we're doing a lot of like really cool things. We're trying to help solve the housing crisis. We're employing people. We're giving people livelihoods and jobs and things like that. And ultimately, I'm not going to lie, I get to profit at the end of the day too. So, that's
Yeah.
kind of like that win-win-win scenario. And so that's where we're really trying to create efficiencies on all sides of things.
Absolutely. And that's one of the things I love about real estate is the ability to create that win-win-win-win for everybody involved. For now, speed is key to all of this. I fully get that, and that seems to be the theme, right? Is how can we do this as quickly as possible? What does a typical timeline look like for you guys?
So we're basically now, I would say, pretty dialed into about 24 months. I would say from time of
Okay.
acquisition to stabilization. So the time that the building is fully occupied is about 24 months. We can do it a little faster if all of our ducks are in a row.
Yes.
I just wish that the permit process was a little faster than it is. It's been my experience that even though we go in with kind of the same things over and over again, I just know that it's going to take probably 6 months for us to get seen in front of the committee here in Toronto and get our approval, and then it's going to probably take another 6 months to get our permit in hand. I've seen that get reduced as of late. So we could actually do these projects in about 18 months. And then the other thing that we're doing a lot more now is we're getting a lot of delayed closings with our sellers. So people that want to
Yes.
sell their buildings, I'm like, hey, because price point is really important for a lot of people right now. And so I'm like, if you want your price, I can give it to you. But
Yeah.
I need a 6 month closing. And they're like, what do you mean? And I'm like, I'm going to close this property in like June of next year. Right.
Yeah.
And I'm going to apply for all the stuff that I need to apply for now under your name at my cost. Right. And
Yes.
so that's been a bit of a game changer. And at first sellers are a little bit hesitant to do that, but we write it into every agreement that we have. And that way we get that runway on their dollar to start the process. And if we can have our minor variance application heard or even approved sometimes before we even take possession of the property, that saves us basically 6 months of time. So then by the time we actually take possession, we're like 18 months in and out.
I love that. Yeah, hit the ground running. That makes a ton of sense. Now, for investors that are listening out there, what are some considerations they should keep in mind if they're considering embarking on this larger scale renovations? Maybe they started out like yourself with just light reno, finishing a basement, updating a kitchen, but they're thinking, now seems like the time to take advantage of this opportunity. What are some considerations to sort of ask yourself to see if this is the right strategy for you? Because one deal for one person is not necessarily a good deal for the next person. It depends on your unique situation. So, what would you say to people considering this?
Well, I want to caution people a little bit, only because I think that I went in a little bit naive to development. I was like, I've got 20 years of experience as a real estate investor. It can't be that different. It can't be that hard. And then I learned some really tough lessons. And by tough lessons, I mean expensive ones. And so I think like that's the main thing, right? I think just going into, even if you have experience as a real estate investor, if you've never done development, like ground up development, it is a different beast, right? And so
Yeah.
just understand that you probably don't know what you don't know. And so maybe you want to bring in somebody who has a little bit more experience, or educate yourself, or partner with someone, or do one of those things, like especially to get your first project off the ground. And then once you've got that experience, then I can say like, hey, now you want to go tackle it on your own, go for it. I think it also
Yeah.
depends on where you are in the country. Like I think that I'm seeing a lot of my students, for instance, in Alberta and Edmonton and Calgary, and they're all hiring builders, design, build,
Yeah.
like, and it makes sense. And I'm like, absolutely. There's no way you should get involved in that process for $170 a foot. I'm like, you can't do it for that. Like you might be able to do it
No.
for 150 or like 130 or whatever, like at the best case scenario. But I'm like, it's not worth your time or your money. You could do 10
Yeah.
projects and let somebody else handle that. It's a little different here in Ontario and maybe in BC too, because our cost of construction is so much higher, right? Like we're at, if I'm hiring it out, it's probably like $350 to $400 a foot. If I'm creating a construction company, we're building at 200 a foot, right? So it's a bit different from that perspective, but you have to want to do what I do, right? You have to want to manage a crew.
That's
You
it.
have to want to manage all that kind of stuff. And the numbers still work if you're buying right. Like one of my students is a group of them are working in Barrie, just outside of Toronto, and they're hiring everything out, and they're paying about $250 a square foot to do their buildings. But the difference is they're acquiring their land for around less than $1 million, where I'm paying double for my land, and their rents are
Yeah.
pretty comparable to mine in terms of like maybe a slight discount. So their numbers just look that much better than mine do because they're acquiring at such a lower rate than I am, and then they're having somebody else do their builds, whereas I'm sort of like set up and doing my own builds. But it's because I like doing it, and I that's been what's successful for me. So I think that you have to look at your market, you have to look at what's available to you, you have to look at what your skill set is, and ultimately you have to look at how much time and energy you want to put into this. Because as a developer, you can
Mm.
spend a very little amount of time, or you could spend 80 hours a week being a developer.
That that is so true. Now, there's a lot to unpack there, but one thing that stands out is in terms of location, like your preference, what does that look like from A, B, C, D neighborhoods? Like, where do you find that sweet spot for you? Because again, the cost of the land, as you mentioned, plays a significant difference in how the numbers end up running and how they end up looking. But it's also balancing it out with not wanting to be in the crappiest, cheapest part of the city, just purely looking at what the cost of the land is going to be. Where do you find that balance? What's your sweet spot?
I think that you want to go into, because of the speed to market of the types of transactions that I like to do. And like I say, a lot of my students in the development space are looking to kind of do a similar type project to what I'm doing. So within 24 months, if you're bringing units to the market, you want to be in an established neighborhood. You want to be in an
Yeah,
area that people want to live in, right? If you were going into like a 20-story tower, that's a 10-year project, right? Depending on the municipality. So that's a very different thing, where you could be in a perimeter neighborhood, you could be in an up and coming neighborhood, you could be in those sort of areas where they're poised for development or poised for redevelopment, and you would be
yeah,
okay. But if you're going to be that quick to the market, like within 24 months, you want to be in an established neighborhood where your tenants essentially want to live in that neighborhood. Now, that could be a lot of different
yeah,
things for a lot of different areas. Like I know my nephews just graduated from University of Alberta. Both of them did, and so like those areas, they're the areas around the university. Like I was looking at properties when I was there visiting them, and I'm like, oh, you could do like this, thing here and here and here, and a couple people have done it already, right? You're seeing these builds come
yeah.
up, and so, maybe you're not going after like that young professional. Maybe you are actually going after the student rentals and things like that. That's a bit of a different demographic, but it's also like can
Yes.
be very profitable as well, right? So it depends on what your end user is really looking for. But based on
Yeah,
your end user, then you kind of have to find a neighborhood that they want to live in, right? You can't build a beautiful building in the crappiest neighborhood in town because it's less money to
that's
buy
it.
the real estate because nobody's going to want to live there, right? So that's the reality of it.
Absolutely, and again, it comes down to that tenant profile and just understanding that, so that you build for that. Now, that being said, you guys have, like you said, you have like your cookie cutter plans that you've put in place, tried and tested, it works well. Do you have a specific tenant demographic that you personally just love to cater for, and that just works perfectly for?
Yeah, we basically build for young professionals. I mean, we
Okay.
have most of our units are 2 bedroom. And there's usually one sort of primary bedroom and a secondary bedroom because we're finding that we want to make that second bedroom big enough that it's an actual bedroom. If somebody wanted to live in
Yeah.
there, because a common thing now is like we either get two people that want to be roommates, they don't want to pay $2,500 to live on their own in a one bedroom, but they'll pay $3,200 to live with somebody else, because essentially that now brings their rent down to $1,600 per person, right? And if they have a two bedroom, a legit two bedroom, sometimes even a two bathroom, that's kind of like that perfect scenario. The other one that we see a lot is a couple moving in together to a two bedroom, and they want the second room for an office, right? Because there's a lot of
Yeah.
work from home, or there's just a lot of like, hey, we have friends that want to visit, we have family that wants to visit. I mean, Toronto is an international city. People come from all over the world to visit here, to go to different things like concerts and sporting events and things like that. So I find that a lot of our
Yeah.
tenants have people visiting them on a regular basis. So they're either looking for that second bedroom for an office space, or a second bedroom to be able to utilize. But that's essentially our tenant package. I mean, we put internet in all of our buildings. This is a little hack that I found works really well. We
Mm.
bring in one central internet connection, and then we wire every unit, and then we wire it back to the main modem. And basically, everyone has a wireless, router in their unit, so they're not sharing Wi-Fi in the building, but they have their own internet that's paid for by us, but then we charge it back to them at like $50 a month for an internet package. So it's half the price of what they'd have to pay if they went out and got it on their own, but we get to
Yeah.
add it as a line item for revenue, right? And so our cost on that
Mm.
is only like $100 a month, and we're charging $400 a month, if we've got an 8 unit, or $500 a month if we've got a 10 unit building. And that's just something that we get to add to our net operating income every single year, and it makes our building more valuable. So just doing little things like that, I think it really helps with your tenant profile. And, we have just simple things like we put keypad locks on all of our doors now. Nobody has to use a key or things like that. So it's
Yes.
just the simple things where like the young tenant professionals, they could like, okay, I get that. Like I'm not having to figure out my key in this old sort of system, and like all that stuff. It seems simple, but it really helps attract the right kind of tenant.
Absolutely, I get that. And when you have the tenant turnover, it's easier if you have those installed from the get go. So from a management perspective, it just makes things a whole lot easier as well.
So much easier, yeah.
There's a ton of those little economies of scale as well, that you get with that. Are there any others that you found that's worth sharing?
Yeah, I mean, I really like everything censored. Censored lighting in the hallways. I just don't like having lights on and off, and everybody, never turns them off, and so it's like that's like a very European thing, where like you walk down the hallway and the lights come on as you go, and then they turn off. But
Yeah.
we're putting it in all of our buildings now. We've got like video doorbells, stuff like that. Those are actually almost becoming obsolete, because nobody, like everyone's just using their phone for everything now. Like nobody's really like, oh, ring the doorbell and I'll let you in. It's like people just text or do whatever. But
Yeah.
security cameras for sure is something that we put in all of our buildings. Not so much in the common areas. We don't really do that, because we do like to have the tenants feel like they've got some privacy. But on the exterior of the building, like we've got 8 cameras on pretty much every building we have. And it just, you'd be surprised at how often you need to use that. I mean, it's maybe only like once or twice a year, but when you need to use it, it's really valuable to have. So I know that sometimes these security
Mm-hmm.
systems and these little perks can be a little bit more money than sometimes what people want to pay. But I think
Yeah.
that, the tenants feel safer when they've got cameras around, and they know that things are being monitored. And I think that's something that's pretty simple and effective from a landlord's perspective as well. And we've had to use it with the
Yeah.
police, and we've had to use it for various different things, and it comes in really handy.
Well, that's the thing is the from the management perspective after the fact, if it can save you just in terms of headaches, in terms of time, all of those things, there's a ROI to that you might not be able to see when you initially install on it. So no, I fully get that. Now I have a question for you, Darren. Is you have a lot of experience with this, and of course you help other investors as well. And for those investors out there that are thinking, well, you know what, the strategy seems great, I would potentially like to use a builder that could assist with this, but I'm not exactly sure if I'm going with the right builder, what are some things that I should look out for so that I can save myself some potential headaches down the road from choosing the wrong person to work with? Any advice for those people?
Yeah, I mean, the biggest thing right now is that, these zoning bylaws and these kinds of builds have been around for long enough now that any builder that's really good at what they do has experience with them, right? So that's always like
Mm,
my first question is like, has your builder built an 8 unit building before, right? And they
yeah,
may be like, oh, he's done a bunch of townhomes. I'm like, it's not the same.
yeah,
It's so you need to have somebody who has experience in this sector because it is a bit of a different thing. And not only that, like there's so many things that are tied together, right? Like financing now
yeah.
is essentially tied to the build because if you're going through CMHC and you want to get an insured commercial loan, then you need to hit one of these, three social outcomes, right? Accessibility, affordability, or energy efficiency. So if your builder's like, yeah, whatever, it's fine, we're going to put in, these systems, and your mechanical engineer doesn't know what they're doing, like you're going to design a building that's not going to meet this criteria, and you're not going to be able to get your preferential financing. So you have to look at it all as a whole. And so for me, it's like if they have experience with this, they know exactly what they need to do in terms of like, here's the kind of build we're going to want to do, and they're going to ask the right questions at the right time to make sure that they're not sort of like getting ahead of themselves in terms of like, designing something that's not going to work.
How do you find personally for yourself, if you don't mind sharing, that balance between making this work from a financing perspective, from a what makes sense to build and making the numbers work, because you mentioned there's a couple of aspects to consider. It's sort of like there's the three main categories that you have to consider when you looking to get into this. How do you find that perfect balance of profitability with ensuring that you're getting the financing that you want?
Yeah, I guess it's. I mean, we reverse engineer our deals. There's no other way to do it. I mean, we have to kind of think of like what's the end value going to be when we're all leased up, right?
Hmm.
And that's pretty easy to project because if we look at our unit count and our average square foot and our cost per square foot to rent, we can pretty quickly come up with a future valuation of this building, and then basically reverse engineering it to say, okay, what's it going to cost? And we've got those things pretty dialed in now as well. We didn't on our first couple, just because we also went through the pandemic and renovated during the pandemic. But now that we know our build cost, we know our end cost of what the building is going to be worth. We're getting really dialed in on what the CMHC loan is going to look like on the back end as well, based on our debt coverage ratios. And so really the only factor that we are sort of like having to figure out is that acquisition cost. And then, are we bringing in investors, or are we going to try to attempt to do this, with some borrowed funds, and then hopefully exiting all those people out at the end and owning the asset outright. And so that's where we've gotten to this point where we've really got the numbers dialed in, and that's those are really the only question marks. What can we buy the land for, and do we need investors, or can we do this internally without any capital remaining in the deal?
Hmm, I love that. And what's the long term strategy for you guys? How long are you looking to hold this? When do you look? When are you? Is exit even on the mind? Like, what's that plan roughly, at least for you?
Yeah, I mean, I'm a long-term guy. I like buying and holding real estate. I mean, anything I've ever sold, I've probably regretted selling. And, sometimes you have to do it in order to, do whatever you need to do in the real estate space. But I
Yeah,
definitely like to look at things in 5-year increments. And so if we kind of think of like that 2-year build time, stabilization time, and then an initial 5-year hold after that, because that's also usually our term on our CMHC loans is 5 years. We have one that's a 10-year term, but most of them are 5 years. And so at the end of
yeah,
that 5 years, it's like that's a good time to reevaluate, just kind of see where you are, see what your appetite is for either, refinancing, or maybe there is a potential exit at that point, and a sale that you want to look at. But it really depends, right?
yes. Yes. And you mentioned there's about a 10-year runway. What are some indicators that you're going to be looking for to sort of see that it's signal for time to sort of maybe pivot in strategy and how you're approaching things?
Yeah, I think, we're already seeing it where CMHC has changed the rules twice since I've been in this space, and it's not been very long. I've only been doing this for 5 years, and MLI Select has only been around for like 2.5, 3 years, and they've changed the
Yeah.
rules twice on us. And so you got to be really careful with assuming that what's there today is going to be there tomorrow, right? And so
Mm,
I do believe that CMHC will always be there for Canadians in the multifamily space that are building rental housing. It's just that the rules
yeah.
might change a little bit. So you have to understand what your projects look like with and without CMHC. And the other thing too is like as we start to see, whatever that looks like, if let's say rents started to come down or construction costs started to escalate beyond where it was reasonable to keep building, you have to just keep an eye on all of that. And like you say, each project that you do is almost evaluated on its own to say, does this make sense
Mm,
to move it forward? I think that you can't sort of make those assumptions and say, well, I know that 2 years ago we were building for this and whatever else. That's a dangerous assumption to be able to make. And so each project needs to be evaluated. Right now, we're not selling anything because not things aren't really selling. I mean, people are not really
yeah.
building a lot of condos. That could very quickly shift, right? I mean, that could be something where,
Yeah.
okay, we could sell these things at 2,000 a square foot, and maybe we can only rent them at 12. Or sorry, yeah, 2,000 a square foot. Maybe we can only rent them at 1,200 a square foot. That metric could change very quickly, and we might just be like, hey, let's set them all up as condos and just start selling individual units, right? But
Yeah.
the market kind of tells you what you can do there, and I think that as we continue to build the business, as we continue to scale it out, we just keep an eye on everything and how those changes affect our day-to-day business. And when we need to make those adjustments, we absolutely make them as quickly as we possibly can.
100%. Makes a ton of sense. And I think the biggest value add for any investor listening out there is to be able to plug themselves into a good network. And I know you guys have a fantastic network at Synergy Mastermind. So that there just allows you to sort of keep on top of what's happening. What are my peers doing? What are they finding? So that you on top of things, because maybe maybe you don't have a project currently on the go, but you are able to sort of keep on top of things with being around those like-minded people and having those discussions. So I couldn't agree more. What a lovely answer, Darren. Now, I wish we could keep this going. I know we need to get things wrapped up, but I mean, I could honestly keep asking you questions. But let's dive into like one of my favorite segments of the show. I call this time capsule. So let's imagine that you've stumbled across a time machine that allows you to travel back and forth in time. Now, of course, you can't change anything, but you can give and receive advice from your younger or older self. So let's go back to when you were 18 years old. Young Darren, what advice would you give your younger self with the knowledge and the experience that you now have? And this could be investing, personal, familial, whatever, a combination of it all, if you like.
There's definitely a couple of people I would warn myself about not dating. That's for sure. But I digress. I would say that the biggest thing is like I think I said it right off the top. Like I grew up with a bit of a limiting belief around money,
Yeah.
around entrepreneurial spirit, around different things like that. And so I think to go bigger sooner would always be my advice to people. I think that,
Mm,
we have this thing in real estate where like, oh, well, there's a progression, right? You have to start with a single family dwelling and then you get to graduate to duplex university and then you get to go to triplex school. And then, I'm like, no, that doesn't exist. If you want to go and you want to build, literally, if you wanted to build a 20-story tower tomorrow, you might not have the resources to be able to do it. And you might not have the people on your team to be able to do it. But if that's where you want it to go, I'm like, just start there. Go and
yeah.
intern with somebody who's building 20-story developments and learn the process. There's no point in you starting with a single family dwelling because that experience, that knowledge is not transferable to the 20-story
Ooh,
tower. So if you want to go
yes.
someplace, just go there. right? And I think because you're going to learn your lessons along the way, but why not learn them on something that you eventually want to do anyway? So I think going back in time, to my younger self, that would be my advice: is get this
Mm,
idea out of your head that only the richest of the rich can be the developers. Only people who come from money can have money. Like all these things that I kept telling myself as a younger man, I'm like, none of it's true. I mean, people that have multi-billion dollar portfolios, they're just like you and I. They
yeah.
maybe have a something in that thing where they're not maybe as afraid of certain things, but they just put one foot in front of the other. And honestly, a lot of their success probably came from hard work and not necessarily from, the things that they were surrounded by.
100%. And like you mentioned, it's thinking bigger. And I, I want people not to get confused by the fact that you're not saying, okay, so if you want to do something big, just go blindly into it. You've clearly stated, like, if you don't know what you're doing, find someone who does know. But you don't
Yeah.
have to start at another random point just because that's where most people start at, if that's not where you want to progress with. So I love the fact that you highlighted that, because you're right. There are skill sets that just aren't transferable anyway. So do you need to learn those skill sets if that's not where you want to end up? Probably not. Find someone who's doing it, put yourself in. And another thing is, those limiting beliefs I find could be a little bit hard to self-diagnose. So until you put yourself in front of other people who can call it out and be like, hey, that's actually a limiting belief. And then you reflect on it and you're like, okay, it is. This has been my truth for this long and I've just accepted it as it is. But lovely answer. I love that. I love that. Now let's go forth. Let's go forward to your 80th birthday. What advice do you imagine that your future self would give you at your current age?
I mean, I hope that on my 80th birthday, I can look back to myself now and say, I hope you took some time to enjoy the ride, because that's my biggest fear. I'm a hardworking guy. People message me all the time. They're like, "How do you find time to do all the things that you do?" And that's my one thing that I'm very cautious of, is like just not committing to be too much in the work atmosphere all the time. And so I balance
Mm-hmm.
that out by spending my winters in Costa Rica. I still work when I'm there. I
Ooh,
say I work from a better location instead of being on vacation. But I hope that I have time to stop and smell the roses and enjoy life along the way. Because if you're not doing that, then what are we doing this all for, right? I think that's why
it's true.
we're doing a lot of the things that we do in financial freedom and real estate, for time. I mean, that's the biggest resource that we can never get back. We can always make more money, right? But you can't get
Yeah.
more time. So if you're not enjoying your time and you're not doing that, to fulfill yourself, then I think you're on the wrong path. So I'm hoping that when I'm 80, I look back and say, you know what, I had a lot of fun doing what I did, and I had time to do all the things that I wanted to do in my life, and I have no regrets.
I love that. I
Except
love
those
that.
couple relationships that I mentioned, but again, I digress.
No, I love that. Honestly, it's being purposeful about where you want to be, and you still working while you're away there, but you enjoy what you do. And if you enjoy what you do, you're not trying to run away from it either, but you wanna take the time to embrace the why you've been doing all of this, and not just get caught up in the grind of it also. I completely get that. Now we don't have much time, but how about I throw a couple of rapid fire round questions? You think we could do that?
100%. Let's do it.
Perfect. So just the first thing that comes to mind: what's one piece of construction advice you think all new developers should know?
Oh, keep it simple. I mean, like I say, wood frame construction. Go with standard window sizes. Get a standard package together and hand that to your architect and say, this is what we use on all of our builds, as opposed to the other way around.
I love that. Standard, templatize it. Love that. What's the most exciting real estate trend you following right now? You can answer that.
Interest rates, they keep going down, so
Love
that's
that.
a good thing.
Keep
Bond
going
rates
down.
too, right?
Yep.
Yeah, bond rates have been falling as
Yep.
well, and so just our projects are just getting more and more inexpensive to build, and also more and more inexpensive to finance over the long term.
Awesome. Well, one last one is, what's one financial mistake new investors should avoid at all costs?
don't think that you can do this in a silo. There's no way. You need to surround yourself with people that are doing what you want to do. You need to be part of networks. You need to be part of masterminds. You need to be part of education programs. The money that you inject into those things, if they're the right things, will pay dividends. There's no question about it. So the whole idea around like I can do this myself, it's a bit of a fallacy, and it'll just slow your journey down. That's all it will do.
I love that. I love that. It's not and I said this in my previous podcast episode that I shot now, is it's not the cost it's not the cost up front. It's the value that you're getting from it that you need to focus on. You know what I mean? Stop looking at the cost. If the value far outweighs the cost, who cares what the cost is? So I love that answer. Okay, fine. Last one. If you weren't in real estate, what career path do you think you'd be following today? Would I be seeing you on TV, in a movie? What would that look like? What do you imagine?
Well, if I had to go back and do it all over again, I think I would have pursued my professional sports career a little harder. I may not have gotten there, but I think that would be the other thing that I was really passionate about growing up was, I was passionate about the arts, and I did that, and I was very successful, and I really enjoyed that time of my life. But the other part of my life that I was huge on growing up was sports. And I love being an athlete, and I love being in sports. And so I think if I was not in doing what I'm doing now, and I was not in the theater world, I would have been in the sports world.
I love that. I love that. And I'm sure a lot of that translates into you being an effective leader, managing your team, having that competitive spirit. I love that. Well, Darren, I appreciate your time. I want to thank you so much for coming on today. And one last thing is, where can listeners find out more about you? Where's the best place for them to connect with you? Now, of course, I'll leave all your info in the show notes below, but I say this all the time, for those people driving and listening to the podcast, just off the top of your head, where's the best place to find Darren?
Yeah, the easiest place is on my website, darrenvoros.com, or hit me up on Instagram. I'm darren.voros there. I'm Darren Voros on all my social media. Check out my YouTube channel if you'd like to see some free education. And, those are the best places to get me. But that's the simplest form for sure.
Perfect. And really, guys, check it out. Darren puts out a ton of good content. Really, really does. So, Darren, I want to thank you so, so much. And to all our listeners, thanks for tuning in. If you enjoyed today's episode, I know you did, leave a like, leave a review, follow Darren along, and keep investing smartly. Thank you for tuning in to the Wealth Through Real Estate Show. Now, we all know social media is one of those key tools that we need to be leveraging. And as a real estate investor, you may wonder how to take that to the next level so that you can really benefit from it. Well, you don't want to miss the episode with Victoria Clooney, where we deep dive into strategies that you can implement. This is your host, Darren Noble, signing off.